Would I buy this business? There's a pool supply and pool route company for sale in Palm City, Florida. I'm going to break down the purchase price on whether or not I would pursue it. Can you actually make money in the business? And how I would negotiate buying it, since I've bought other businesses that are successful in the past. If you like this type of content, I post a video every day at 1:15 about how to buy a business, how to start a business, and other content around entrepreneurship. So let's hop into this one right now. Are you ready to swim in the profits on this pool supply and pool route company? It looks like this is a pool supply franchise. They also go out and they have a contractor's license to probably repair and clean pools. So here's a picture of the store. It looks pretty clean. Looks like a basic pool supply company, and the asking price is $495. I'll get into these numbers in a second, but the first thing I look at, okay, it was established in 2005. That means the owner is probably looking to retire. So I always briefly read through the description, but I don't take too much out of it, because a lot of times they're trying to sell you on being interested in buying this business. But this location does offer retail pool cleaning and repairs. So that's where they're getting a good chunk of their money as well. 3 employees here. The furniture and fixtures is included in the asking price. What is not included is the inventory of $67,000. I'll get into that over here in a second, but I'm just going through the description here. Talks about competition, growth and expansion. The owner is willing to finance it. We're not going to go into that this time, but I'm just going to use normal financing because the opportunity in this business is actually pretty big. Owner's looking to downsize and retire. So there's my question right there. So you always want to know, why is the owner selling? Because if he's selling for a specific reason other than retirement or something emergency happened, you want to know why. Why would he be giving up his golden goose that's laying eggs, right? So let's go over here to the Excel sheet and let's evaluate the purchase price and whether or not this is a good deal. So we're going to break down the purchase price here. He has $50,000 in equipment. That's right down here, FF&E. That's fixtures, furniture, and equipment. Goodwill and value is essentially anything above the furniture and the equipment is what the business is valued at. So he's valuing his business at $445,000. Usually that is a multiple of the cash flow. So for this, it's a little under, a little bit above 2. So he's asking for about 2.5 times the cash flow here for his book of business, his value, right? So total asking price $495, but the inventory is not included. So we have to add back in the inventory of $67,480, but set a total purchase price of $562,480. So let's back into this and see if the purchase price that he's offering us, even if it's a good deal without even negotiating anything. Gross revenue for this business is $771. And our cash flow is $195,777. So that means that he was potentially taking a salary out of that, but we're taking his salary out. So if you were to buy this business and run it the same way he did, you're running at about a 25% profit margin. That is a pretty good profit margin for a decent retail business. You're looking at about 10% up to 25-30. So he's definitely on the high end of profit here. Cash, if we were to pay cash for this business, the return on investment on paying $562 here. If we take this, actually it's, I need to move this down to here. The pay cash return on investment is 35%. That's still a good return on investment, 35%. I don't know if you're going to get that in the stock market or any other investment, but before we get too deep into paying cash, I would like to tell you that if you were to finance this business, you'd end up a lot better on your return on your money. This is why so many people say use the bank, use the bank. Use the bank as your advantage, and if this business works out and you can continue to run it successfully, this is why people use the bank. Your down payment is about $112,500, and that includes your inventory, financing the inventory. That means your loan amount would be $449,984. That's, you want to get the longest loan that you possibly can. So usually standard is around 10 years. So I would try to get a 10. If you can get a 15, that's going to really help out the cash flow here. Your interest is going to be around 10%, but I would recommend that you get a variable interest rate. And the reason I would recommend that is because I foresee rates going down in the next 2 to 3 years. That is my personal opinion, but I do foresee them probably going down. So you want to get a variable interest rate. So when it lowers down to 7, your rate lowers down to 7 as well. Your monthly payment for that loan is $5,950. The monthly cash flow based on what he did up here is $16,315. So our monthly net after the loan is $10,365. That puts our annual net profit at the $124,377. So let's look at our ROI on the down payment. We only put down $112,000 of our own money. We get $124,000 back at the end of the year after paying our loan. But the nice thing about this is, hey, you didn't have to pay any more money out of your pocket. The business that you bought paid for the loan. So the most money you put out is $112. You get $124 back the first year, and the next every year after that, you're 100% profit. So on that initial investment of $112,496, you get 111% return there. Way better return than paying cash for the business. Now, that being said, debt is a scary thing because if this business were to go belly up, yes, you're on the hook for $5,950. But if you were to pay 100% cash for this business, you're on the hook for $562,480. Either way, you're going to have to pay that purchase price. I'm just saying from your own money, from your own pocket, you can scale a lot easier by getting debt on this business where you can go out and continue to buy more businesses. That being said, I would say when you're looking at this gross revenue, anytime you're buying a business, I would project a 20 to 30% worst case scenario drop in revenue, drop in cash flow. So if you can regurgitate let's take a 30% here, 0.3 to 262. So you're looking at about $500,000. You're still going to make money here because that cash flow is so big. Okay. So you're still doing really good. Now, I will say if the business doesn't work with a 30% deficit, then I would think long and hard about buying that business. Any business you buy, you should have a plan of action to grow this. So this business over here, we're planning on what can we do because this owner is in retirement mode. He's wanting to sell because he is in retirement mode. He wants to sell his business and he wants to go on to the green pasture and enjoy his life. So he is not pushing as hard, maybe, and you can come in and push a lot harder. You can look for different areas of expansion within that business. So that's how you can really, that's the opportunity of scaling this company. You should never buy a business and say, I'm just going to let it do what it's doing, unless you're a large private equity company, and that makes sense. But buying a business, your intent is to grow that business. What questions would I ask the owner? I would say the first question I always ask, we got this answered, he is retiring, right? So he's retiring. That's good. That's a green check mark. That means that he's not leaving because the business is horrible, that it's not working for him. The business is working for him. He just doesn't want to do it every day anymore because he's getting old. Does the owner work every day? That's a question I would ask. What am I signing up for? Am I signing up for 40 hours a week? Am I signing up for 20 hours a week because he's kind of scaled it out? If that's the case, it's great. I can go buy another business. Yeah, I just want to know what job am I signing up for as the owner here, and that allows me to know, hey, if I'm working 20 hours a week, maybe I'll be able to work a little bit more, cut out some of the salaries, and then I'll have some of that money back. Or if I'm not, maybe if I'm working 60 hours a week, is there enough money in there for me to hire another person to cut back on my hours so I have more time to go buy another business? Do you have employees? It looks like he does. He's got 3 employees right down here. So I would want to know what's going on with that. What hours do they work? Are they full-time? How much do you pay them? Getting into that, do they, have you communicated that you're looking to retire? Why do they not want to take over the business? Just questions like that you're really trying to understand where he's coming from. Can we keep the name, branding, and marketing? My real answer for that is, hey, I want to know more about this franchise. Where are we at financially with the franchises? Have a good reputation. Pinch a Penny franchise, right? Okay, so I want to know how much am I paying to Pinch a Penny? Have they been helpful? What's the transition period with them? Because obviously if you're buying a franchise, they want to vet you. Is there any training? How does that work, right? Also, due diligence items. This is for every business you buy. You want financial records, P&L, which is profit and loss statements, balance sheet, income statements. You want those financial records because you're going to have to verify those, cross-examine them against the bank statements and the tax returns. If the bank statements don't match the financial records, you need to be asking questions. Why is there more income on the financial statements than there is on the bank statements? That is a great question to ask because he may not be truthful with, or he or she may not be truthful with the financial records. So cross-examining with the bank statements and the tax returns allows you to verify that income coming in. Next thing I want to do is I want to meet in person. I want to go to the shop and I want to sit down with the owner and I want to have a conversation and really try to understand and look them in the eye. If I can look somebody in the eye and ask those questions and they're responding with a positivity, if their story kind of lines up and learning more and just really having a conversation, then that's the most important thing. And I always say, I don't talk about negotiations, right? I think you can negotiate the purchase price here. I think you might be able to come down a little, maybe add some more cash flow here because you're saying, hey, what if this all dries up? You could always, everything's negotiable, right? But what is not negotiable is leaving this owner in a bad taste in his mouth if he's going to help you transition that business. If you negotiate him to the rocks and then this business, you're needing help, you're wanting to call him and ask for questions, he's not going to pick up the phone if you shorted him. So what I'm trying to say is when that meeting, you really want to understand, hey, how can I have a relationship with this guy moving forward? Because the best business transactions are when the previous owner can still be in contact with the next owner, transition those things, because there's so many things that go into operating a business, especially since he's been operating it since 2005. You're going to want to make sure that negotiated in this purchase price is that the owner's going to train you for a month, or he's going to continue to transition you for 3 months. He's going to be available for the next 2 years to answer some questions, making sure that he's open to that, because if you have questions, you want to make sure that you get those answered to make sure that, hey, this loan in 10 years, you want to make sure that it's paid off. And especially when it's paid off, you can keep this revenue high, the ROI is going to go through the roof. So this is a business that I would pursue if I was in the Florida area. He's in Palm City, Florida. Definitely a great area for pools. A lot of people have pools. Florida's a growing state. If I was in Florida and I'm looking to buy a business and I'm near Palm City, definitely look into this. Great opportunity. I really like this business. If there was a way in which I could run this business passively, I don't believe there's a lot of revenue here, but if I pay a manager 60 to 70 grand to manage this business, I don't think there's enough profit left over for me to take this risk on the financing. So therefore, I wouldn't buy it as a passive investor, but as an active person, this is a great start business that can really get your profit up going. And you could probably see if you could operate, if you work a job and you have an extra 112 sitting around, this is where you could really get a return on investment, start building wealth very quickly in your life. So if you like this type of content, I'm going to be reviewing other businesses for sale and posting about how to start businesses and entrepreneur related content. So give me a like and a subscribe. Thanks.